Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm with KKM Financial. Well, we're seeing the VIX down today. VIX currently right around the 49.5 level. That's down 4 of the last 5 days. And when you look at it over a week period, we're looking at the VIX down about 25% for the last week. And I think the main factor here is why we're seeing the VIX lower, even though we're seeing the market lower, and that has happened a couple times this week, is we're not seeing the realized volatility that the market had experienced the last couple of weeks. And even though the moves are still substantial, they're not nearly as outsized as they have been in the past couple of weeks, and that's a pressure point for VIX pricing, and particularly SPX option pricing. When you don't see those realized moves, it certainly has a tendency to pull in the vol expectations. And looking at the roll market, I'm looking at about the roll market coming in about 80 cents, and that's 80 cents of less negative yield, currently around the $4.25 level. It is interesting to see that the front month future is down today, but when you go from May through the end of the year, you're still seeing the back month futures holding up. And so you're seeing a shifting of that roll market, particularly from August to November, where it's flattening out in the last several days. Looking at VVIX, measure of implied volatility in the VIX options, we're seeing that trend lower as well, down around 144. Started the week at 168, so we're seeing a steady decline in the volatility expectations on those VIX options as well. Activity in the VIX options, out of the money call activity in April, 60 calls, and out of the money put activity in April, those 40 puts, that's where the action is today. In May, we're seeing some out of the money call activity as well. Looking at next week, I want to point out, I think it's important to really focus on the evolution and the initiation of the activity coming out of the fiscal stimulus and the monetary stimulus, both from Congress and the Fed. I think that's going to be very important, and that as that message continues to roll out on the initiation of some of the measures that they have taken. Couple that with the fact that the market's still going to identify and look at the duration of the coronavirus and its impact on the economic structure. The duration has been pushed out a little bit more this week, and I think that's another reason why you're seeing the market struggle.